Hello and welcome to this week's Ferrari Financial US Market News Summary. Well, it was a little bit of an odd week on Wall Street this week with generally upbeat economic news, not really doing much for the market except on Thursday when there was a dramatic reversal and quite a sell-off in the last two hours of the day. In fact, there was a drop of about 75 points on the Nasdaq before it recovered about half of that before the close. We feel that this is symptomatic of what is actually happening out there at the moment, which is a momentous tussle between bulls and bears. The market really doesn't know where to go from here. On the one camp, we have the supporters of the view that the Federal Reserve will support the market and continue to push it up, and on the other, of course, there's the subprime problem still looming, together with a rather poor start to the earnings season with quite a few companies giving warnings. Let's take a look now at the Nasdaq Composite Index chart to see how the struggle between the bulls and the bears may well play out in the short term. A 12-month chart now for the Nasdaq Composite Index, because I really want to show you the movement over this last 12 months with regard to the long-term average line here. As you can see, back in July we had what we thought may have been the top of the market for the time being, formed here with the big drop away on the concerns for the credit markets. And in fact we did have a panic day back in August when we in fact touched under the 2,400 level at 2,380 approximately, with a quick rebound. What is significant though is the volume action around this period. Excuse me. We have really two things to look at. The typical build-up that you would expect at a sell-off point here. More importantly, when there was a short recovery in the early part of August, that's when the volume reached its peak. Not so much at the buying point, but at the first opportunity to sell at a reasonable price off the top. And that's significant to us, particularly when it's reinforced by the fact that when the rebound did come on the news that the Federal Reserve was going to most probably cut rates and support the market to some degree, we did get the inevitable increase in volume on that day and the day after, but it was very short-lived. And notice how the volume has dropped away dramatically at this point here. These 2 points are significant, and even though the rebound has been really more than we expected and has in fact gone on to create a new high, it's done it on relatively low volume. The volume is starting to build again near this new possible top. We're well extended now off of the long-term average line, which is again a point to note. And all in all, we feel that this may again be another top forming and not just a continual trend further upwards. If I draw the long-term trend line, which really came from this point here we go, drawing it through there and not at the base of the panic action, but really at the base of the action over that 2 or 3 days, which is really that point. You'll see that the trend line now is showing that the new high formed on Friday with the rather good jobs report and the readjusted August figures has really reached a point well above the long-term trend line and ripe for profit taking and at least a short-term reversal at this point. Well, the market may be holding on to its gains for the moment, but the dollar certainly hasn't, and weakened quite considerably again this week. It's notable that the market, after a short adjustment in the dollar, has still seen the dollar situation as really dire. Even though inflationary pressures may have eased somewhat this week because of the economic news, we do feel that the Michigan index dropping on sentiment once again does show that the market still has its problems, particularly the housing market showing no signs of real recovery, is certainly making people more cautious about spending money or taking on any further loan debt. The third quarter earnings season is unlikely to help, judging by the early warnings from several companies, and the indication going forward doesn't look too promising. We feel that the earnings generally will have to improve as the season unravels, together with retail sales holding up at the start of the US holiday season with Halloween and then Thanksgiving, before really this market will look like it can weather this storm. We feel that the channel scenario is the one that is most likely to stay in place for the next few weeks, with downside volatility, the possibility of quite a sharp downside movement ever present. We'll know a little more once we have another week of earnings to digest. So until next week, it's goodbye from London.